It's 12 o'clock. Welcome to the Second Stock. It's Friday. At last, we made it. It's been a very tough week. Some of us nearly didn't make it. Some shares didn't. In fact, there's quite a few shares being delisted. I talked about this yesterday, actually, John. Johnny's here in his Friday T-shirt, ready for the weekend. It's going to be a warm weekend.
Yeah.
Climate change or just, some people say it's not climate change. It's just fine.
Who knows?
Indian summer, as they call it. What do they call it?
Who knows? Let's not cause an argument.
Yeah, no, let's just try it cause an argument. In fact, by all means, hit that subscribe button, like, share, comment, please. Your comments help the show, trundle along nicely. And so if you haven't commented before, please do. And by the way, if you haven't downloaded the Vox Markets app, please do it. I genuinely think for RNSs and content, it's one of the best things out there. I know, and literally, it doesn't cost anything. It's free. And people say, is there anything free, in this day and age? There's not a lot free, but the Vox Market app is.
It is free.
I genuinely, if that went, I would be lost as to where to find my RNSs because they just pop up. You walk in the dog, an RNS pops up. Companies you follow, so it's very good.
A lot of work's gone into getting those ship shape in Bristol fashion. They are good to go. I'll tell you what else is happening on the site today. So
yeah.
If you go to the RNS page of the website, you might as well do it while we're...
go on. RNS there. So this is RNS there.
There we go. Go RNS 10. If you go to filter by announcement type down the right, on the other side, that's the market. Filter by market.
If you look at any filters, if you go to AIM, for 200, so all markets on this side by announcement type.
This is what's new. This is what I like. That. So then you can really get into the detail results. Of, no more doom scrolling. Here you go.
Yeah, results and trading updates. You got operation updates,
quick as you like,
launches,
as well.
Mergers, acquisitions. I tell you, there's a lot of look at that. You can look through that.
It makes it so much quicker. So much.
Yeah. Rather than having to, I like that. Yeah,
love it. Love it.
Okay, so so by all means, check that out. A bit of a plug there, but it's worth using. Honestly, like I said, I think one of the best charts in the world is TradingView. I think we are the best in the world at delivering RNSs via notification, and I think when the markets move quite quickly, this is what you need. Anyway, like I said, have you seen actually, John? I mean, the title of this particular taking stock is it's UK house prices fall by the most since 2009. And I thought, so what? We're used to that now. After a while, bad news doesn't keep hitting. It
matters.
Do you remember a while back when the Ukraine war first started and there's bombs going off and people being killed? People are outraged, and of course they should be. And it's still as bad. And yet people are less outraged because as time goes on, people get less, battle in that sense. But it's we become blasé to news, and like I said, and in fact, if you look at these figures here, right, they're not that bad. The headlines want to draw people in, to scare people into reading the headlines. But if you look, they fell, so house prices were 4.7% lower last month in September 2022 compared with 4. But listen, they said here, the falling house prices so far remains much less marked than the climb during the coronavirus pandemic. So they rose anyway. They were in bubble territory. They're only just taking off the froth.
There's a lot of it's froth that's got to come out, but it's you're right. I mean, the media likes a good old negative headline. It does tend to shift newspapers or clicks or whatever you want to do these days. But there is weakness in the housing market. There's a lot of news around Help to Buy, and how actually a lot of people who borrowed with sort of government support and paid a premium for new build houses might find themselves in negative equity. Especially when they come to remortgage, everything gets a little bit tricky. If you're trying to sell a house, your buyers are getting twitchy. If you're trying to buy a house, you might be thinking about holding off in case prices fall. So it does all have an impact, and it's starting to become a bit more real, is what I'm saying. I know people who have lost buyers at the last minute, months into a housing transaction. It becomes real, and then the nerves, the jitters spread.
Yeah, we said yesterday, that withdrawal of equity from houses gone down massively. And that's a massive knock-on effect. But what I say is, I keep saying this, economy markets. It's the market. The housing market is a market. And so, you find people who are buying at the top when everyone's rushing to buy houses. Guy over the road from me, in fact, next door he is now, Gary, his name is. He has a plot of land next to us. He sold his bungalow across the road at the top of the market. There were people, bidding war, 3 people. Sold it about 50 grand more than it's actually worth now. Then he bought the land next to us, and he's built a house there. But so that house now, people, that kind of herd mentality. You got to buy a house, got to buy a house. That's like the stock market. When prices are low, people sort of hold back a bit. They say, well, hang on a second, you got to try and get a bargain. Wherever you are, in the market anyway. You got to look at companies that are valuation, growth, future potential valuation. Will that go up? But you've always got to try and get a good price, good value when you're investing. Anyway, look at Halifax average house price homes remained £39,400 above pre-pandemic levels. So not like stinking off, but it is a bit of a stall, a bit of a, bit of what it is. People just get.
But it's a wealth effect. Housing creates a wealth effect. That is the other thing that it does. When people are, equity rich in terms of their house price, then they feel, inclined to go out and spend. So, as I said, I'm less inclined to dismiss this stuff as, a storm in a teacup, or in fact dismiss the link between what's happening on the stock market as well. There is a sort of transmission effect through the system, and it might well be psychological, but psychology matters. Psychology is everything.
Well, my thought is this. I think we are slowing down very quickly. I think it's accelerating the slowdown in economic growth, which is good from the Bank of England's point of view, and inflation. And I think to a certain extent, we'll see maybe within the next quarter of next year. We're only 3 months away from the new year, right? I think within the next quarter, we will see the Bank of England getting worried about the slowdown in economic growth. We're seeing really horrendous figures coming through. I think unemployment will increase and they will step in. Anyway, this is the market today. FTSE 100 up 0.5%, 250, almost 0.81%. AIM struggling there, still struggling below 700 points. Yeah, insurance there, not saying, quite a bit. I don't know why that is. Why is
I don't know why that is. Just looking at Aviva, no specific news. There must. I don't really look at the large insurers. I will find out.
Yeah, large insurance companies. I know Buffett's a big fan of insurance companies because, of course,
he's got one. His whole empire is built on an insurance.
Yeah, exactly. Because they
takeover speculation. Takeover speculation.
Oh yeah, it's a lot of that going on. Yeah, a lot of that going on.
Yeah,
M&A going on. So a couple of comments first of all. Let's go to the first comment, which was let's look. Can you have a look at Alpha Financial Markets Consulting? Is that an example of a downtrend? Well, let's go to the charts here, and AFM, I think the ticker is, and let's because I keep saying this, and some people don't understand what I'm saying, but I say always research a company first and foremost, and that way round. Look for a company, look what to invest in, and if you like it, then look at the chart and think, okay, is it in a downtrend? If it is,
why is there a drop off? That's not a downtrend. I mean, that was an uptrend, and then
what's interesting here,
sharply reversed here in late June. So
what's interesting here is what do you do in the chart? First of all, what sticks out to you there is that bar, isn't it? That big bar dropping down, right? So that there, what's that? Date is at the bottom of the chart, 22nd of June. Okay, so let's click in here. So what happened on the 22nd of June? So you make some financial report or something. So you scroll down there.
Full year results.
Full year results. What's wrong? So everything looks looking good there. Look at the figures there. 48% top line growth. Right, it's looking all good. Adjusted profit before tax up 30%. Then scroll down. Always look at the outlook. Shares about what's going on forward.
Especially in full year results, because you'll know what's in them really from the full year trading update. It is what they say about what's coming next that matters in full year results.
Yeah, look at that. There we are. So it all looks good. Third paragraph there. In recent months, the global consulting market experienced increased levels of competition as a result of overcapacity, which we expect to be the market backdrop in the short term. So there we are. And also, while we see higher levels of competition, lengthening of sales cycle, we are confident that Alpha's strong client proposition and business strategy will continue to drive the market share growth. So that's when they say that, they're looking forward. What they know there is almost deciphering fact from what they think, because their opinion. What's fact? What's opinion? Now, fact is they are seeing competitions affecting them. Okay. Now, what their opinion is, they think they will continue to drive market share. They don't know that, but people are not believing that because they sold off massively. And since then, look at that. They've come back down to this previous support level in 7th of March, 2022. Now, if you look at that, look at this, John, at that bar there. That's 6 months earlier. That's the interim results, which are a blowout. And so something's changed in the interims and the final results. They're saying competition's coming in the market. Yes, that isn't a downtrend. I wouldn't touch that, even if you want.
I'm just looking. I mean, the numbers are great.
Yeah, but the actual that's going to soften, isn't it? Yeah, it's going to soften the looks of it.
Well, I mean, yes, but the forecasts, remain unchanged largely. So, still forecast to deliver 6% top line growth this year, 75% pre-tax profit growth.
Yeah, but you wait though, John. Look at this. Look at this. Interim results last year, right? That's 23rd of November. That's when they did well. So the trading update's on the 11th of October, right? So where are we now? So I'm assuming they've got a pre-update trading update coming out. I would wait for that, because if that's played out, that softness, that competition, then they're going to. I mean, who's buying here? But who's selling or buying? Rathbones are. Oh, they're up to 5%. But I would wait until they come up with the trading update to give you further guidance on that. But yes, I mean, as far as downtrends goes, look at that. That is literally, that was the previous support there, on Tuesday, 22nd of August, at around 314. It's broken down below that. And you can see it's way off the moving averages, way off. Yeah. What you see is a break above that. You can see that here. Just look at the trends. I mean, just take the 50-day, the 200-day. Look at that here from August 2020. That's a nice trend. Nice clean air between the 200-day moving average and that. And all of a sudden, it spikes up, starts to come lower, and breaks down below it. And this is the start of a bit of turmoil here. It's still trying to break up, but it's getting a bit messy, breaking down again. So yeah, it's not. I'd wait. It's messy. I'd wait. Wait to see the trend.
Yeah, but it's also really nice looking company. Certainly, does consulting to the asset management industry. So. Lots and lots of change in the asset management industry.
What's the forecast for that, and what's the valuation? What's the PE on that? Can you see?
Not expensive, so I can tell you that its forecast PE is 11 for the year ahead. Net cash on the balance sheet, it's doing operating margins of 18%, 19%, near enough. Very decent returns. Pays a dividend yielding 4.6%. So there's a lot to like on the basis of the numbers and the basis of what it does, the niche it occupies, and as I say, lots of activity in asset management, lots of mergers, lots of changing strategies. I've been hearing today, but over in the US, a lot of mutual funds are considering shifting to become ETFs, for example. So lots going on there. But yeah, chart says wait, but definitely one to keep an eye on.
Okay, so next comment here was on, just came in before we came on, but L Saint says, any thoughts on Sarabi Gold? SRB ticker, there have been a significant increase in gold resources, and 20 million market cap seems pretty low for a company that had $5 million a half year net profit and net assets of 90 million. I did look at that and I thought, is there something wrong with debt here? And I did scroll through, it didn't seem to be. Like I said, I scrolled down and looked at the interim results, and I thought, for that's Q1. That is.
We've talked about it before, but gold miners have all been struggling with the cost of production, and when you've been in a period where the gold price has been rising, you would expect that the sort of leverage play, the miners, to be doing really well, but they're not. And as I say, what's that loss before? But they haven't been because they're worries about mining costs. Also, the dollar's getting stronger as well, and the dollar and the gold price are inversely correlated.
Yeah. Okay, so this is interim results, 6 months here, 30 million top line, so it's down a little bit, but profit before tax is up. And if I thought they got a lot of debt, and they really haven't. They haven't got that much debt. I
think sentiment in this sector is really poor.
Yeah. So they got current liability of 6.4, but if you look at the total current liability, it's 13, and they got total current assets 27. So no problem with that score. Yeah. Like I said, they have got an equity of 91 million. But like I said, do you know what? Chart wise, I don't mind this. It's coming round. Like I said, it's had a few fake breaks, but when you see this coming out, it needs to flatten out. So we want to flatten out a bit, and it needs to get above previous highs. So like I said, all you want is new highs, so higher highs. You've got one here, see. High. So if you can make it higher now than this and higher lows, it'd be good. But I don't mind that.
Look at gold price is heading low at the moment. So.
Yeah, let's look at gold price. Commands. Have you seen natural gas? I've never ever do spread bets or things. Oof. I put a little spread bet on natural gas, and I'm in profit there. It was an obvious break, I thought there, and I just put a stop loss there, and it went up and broke up natural
Winter
gas.
Is coming.
I don't know why though, because storage levels are very good across Europe, like 80-90%. So because of the Russian, Ukraine war, but I put tiny little. Last time I put a spread bet on was about 10 years ago. I put one on. I like the chart natural gas so much. I thought, how can I play that? Look at gold. Wow,
yeah, it's horrible. And as I say, that's dollar strength that's doing that.
Yeah.
And the other thing is sort of, higher rates. So the bond sell off.
Yeah.
When you get higher rates on government, risk free, essentially government borrowing, then why hold gold? Because gold doesn't yield anything. It's not it's not a productive asset in that sense. So yeah, you've got a sort of double whammy there for gold at the moment. And I mean, the one gold is. I mean, it's not low, the price, but at the same time, it is going the wrong way. And the thing you would hold gold for is sort of portfolio insurance, but you wouldn't hold that much.
Yeah. So you can see it there a couple of times. It's annoying. It's triple top there. Triple top. You don't see that very often. Whereas try to get above that 3 times, that 2000, so just over 2011, 2018. It's come down. I don't know where it's come down to, but you see this sort of. It's quite messy. I mean, the support here around about 1800, but it has gone down to 1600. So, it's a messy chart. That's a bit of a messy range. That's going. What you want is a nice uptrend like that. It breaks out. It does that. That range there. It'll stay in a range for a long time. Gold, and then it'll move up. So you have to be very patient with gold, I think.
Yeah. It's about. I think it's just poor sentiment towards gold miners at the moment.
Yeah. Okay. Okay. Let's go to the front page. Let's look at the most followed Kefi again, copper gold in there in Saudi, Ethiopia. Been trying to get that away for years and years. One of the most followed companies is Aviva. Wow.
Well, that's because of the takeover speculation.
Oh, okay. All right. Yep. 8%.
Shares up 8%. When something's moving, it attracts interest. I mean, it goes without saying.
LungLife. I hold some of that. Metro up 23% because they're selling off. Apparently, there's a story they're selling off. In fact, it's one of the stories I put on the front page here. But they're selling off apparently 3 billion of their mortgage. Where's it by? Troubled mortgage book sale. Scotty's at the Metro plunged. I say. Those standing out by the London-listed high street lender included Lloyds Bank and NatWest Group, apparently. So city sources say. So they've obviously, been someone in those areas. Those banks have been telling Sky News.
Metro has been. I mean, it's had problems with regard to its regulatory capital before. So I mean, it's a bit accident prone.
Yeah. So Kefi, Aviva, LungLife, Destiny. OBD again there. Someone did incorrectly say actually on a podcast with Paul yesterday. LungLife haven't done their clinical 2 trials yet. They don't need clinical trials. LungLife, okay, it's a test. It's like OBD, same thing. They are going for FDA approval. They don't have to get that to commercialize, and they'll commercialize first. Then they go for FDA approval. Vast raise money again. There,
well done.
Bit of cash. It's hard to raise money. Vast are doing it. Asiamet Resources, Canadian Overseas. Corporate update here. Are they up? There's a little bit of they're saying there's a BKM project. I was talking to John Mayer actually. I'll publish this podcast in a bit. But I was saying, John, what sort of critical metal or commodity do you see in biggest deficit? He said there'll probably be some that are small unknown sort of rare metals, but he said in my mind it's copper.
Copper.
For sure. Copper is going to be the one that where is it? HG. He said, we can't build enough mines for copper because everything, EVs, everything, wind turbines, everything needs copper, and so it is. Dr. Copper said it's seen as the barometer of the world growth, global health, and so as you can see, if it is a barometer, largely the Chinese economy, you can see there it's come down, it's struggling a bit under the 200-day moving average. But anyway, we're also on the front page here. Asiamet Boohoo, who's buying or selling Boohoo? Fraser's, there we are. They got the 13.5% now, nearly. Fraser Group. They're brave, and it's takeover, isn't it? Because they are getting hammered, aren't they? Look at Boohoo.
I do like their style. I do like their style.
I mean, he's buying.
He's a proper
What's
trader.
What's the deal there? Just buying everything, isn't he? Just buying everything. Just buying it's cheap. Just buy it up.
Yeah, but it doesn't necessarily come to a deal. Always.
Like Ashley, no.
It's worked in the past. They buy if they can get it through, then they buy it. If the numbers don't look right, then they don't. But the stake building is, it's tried and tested tactic.
Yeah. Okay. So on the front page, John, let's go to the front page a second.
Not a lot of news today, really.
It's not, was it? Is it?
No.
So we got SRT Marine ready to sell for large order book. Yes. Are they down?
No, investors are nervous about this. I mean, they say the shares down about 8% today. I mean, what they've said is basically a reasonably chunky loss in the first half, and sales that are, basically it's about 5.5 million, but the full year forecast is 30. So, there's a big lot of work to do in the second half. And, this
so they did half year trade update and well, they say...
Well, there's a reason for this. So basically their existing business, their old business was transceivers. So basically, they're bits of radio kit that essentially locate boats out at sea.
Yeah.
And that's it's been sort of plugging away doing that for years. Decent business, but what it's getting into is something called maritime domain awareness. And this is like air traffic control for the seas.
Mm-hmm.
But it's quite remarkable. Would you get in a plane if there was nothing controlling, mapping where all the planes were in the sky? Of course you wouldn't. But at sea, no such systems exist, or in sort of any joined up way. So there's this new idea, maritime domain awareness, used to manage the maritime environment. It's sort of also sort of trade, environmental protection, security. All that sort of stuff, and SRT has built the system. Won some big contracts, but they're really complicated, and it's been in sort of ramp up mode, and they start rolling out the second half. Yeah, okay. But it's just people are understandably jittery because it's we've seen it so many times before. Second half waiting, a lot of work to do in the second half, and it doesn't materialise. But it's slightly different. This, I think.
Yeah. As you see there, it's now broken down. There was previous support around about 50 pence, and now it's broken down below that, and then it's almost at the chart new. It broke down below that, tried to hold a bit, 48 down at 40 pence now.
Yeah, but its contracts are massive, by the way. So and that's why they're so complicated, take so long to put together. It's got a 40 million Coast Guard contract in the Middle East, and there is a 140 million, I think it is, Coast Guard contract that's due to land in the second half after a lot of work. So I mean, these contracts are huge.
Yeah.
But
okay, all right. So the app is cool. Yes, AI investor. Yeah, use the app. Phil says Hargreaves Lansdown. I bought. What am I missing besides the obvious? Competition, recent scandal, 5% dividend.
I almost bought as well.
Say who did?
I was very close to pushing the trigger. I was thinking about it while I was out walking the dog, and I forgot, so I didn't buy. But I don't know what's you missing either.
Surely this is quality. Yeah, quality you want to be buying and holding for some years to come. Yeah, I would say that. Yeah, I just think with my approach, I just want to time it better maybe because I'm looking at the chart now. Stephen says, El Saint, I lost 42k on Avesoro, a small West African gold miner. Be careful. Gregory says gold extraction costs have got more expensive.
Yeah.
Not many miners making profit. That's it. Yes, in fact, spot on there, Gregory. I think that's why sentiment's low on Sarabi, because you've got the costs going up. Gold is now coming down, squeezing that margin.
Yeah.
So there are very few. So there's the worry about how slim that margin will become, Well,
the thing is,
be losing money soon. You never know.
Yeah, and what will happen is even the miners that are making, well managed, that have a lower cost base and are making a profit, will just suffer alongside those that aren't. The sentiment will drag down all boats.
Yeah. Elsa, I know the pain around investing in African gold miners. I've been stuck in Kefi for over a year. Although fingers crossed, we should have some good news there. Let me just. I just think when you're investing in stocks and shares, right? And this is through learned pain. Okay, it's a risky business. It's all about risk and reward. And what you want to do is try and remove as much of the risk as possible, known risks this is, because there's always unknown risks, and then hopefully the reward is still intact. So if you can see the reward, don't worry about the reward. Start with the risks first, and then look at the reward. So you want to see good upside. And one of those risks to me, which is a known risk, and you can avoid it, is things like debt, big debt, jurisdiction is also one. You can avoid that. In risky areas, you don't have to. There's 3,000 listed companies. You don't have to invest in companies with lots of debt or in risky jurisdictions. If it's because you get more reward, sometimes that doesn't play out. It's a false economy. It's hard enough trying to do this. Try and find. What would you say, John? What would you say? What's the least risky company on the stock market? And start from that point of view. Which company can it not go wrong for? and you probably won't get much return unless they pay a nice dividend because it's also priced in. But then you have to up the risk a little bit to get a bit more reward. Then as long as you're dealing in known risks, you can,
the least risky company on the stock market.
Yeah, but you know what I'm saying, though? Because
I do.
We think about all the known risks, and then you could try to remove those because there's always be unknown risks. You may have a dodgy CFO in there or something, that's an unknown risk. But so it's hard enough anyway dealing with the known risks. But if you're taking on those known risks, are you getting a good reward from that? I don't know. And also the probability of that big reward comes down because those risks go up.
Yeah.
Tell me in comments, actually, what's the least risky company you can think of listed on the stock market? And have you gone through the risks? Think in that way first, not the biggest rewardy, the least risky. Think of that way. Matthew said, tells me defensive not safe anymore. Risk-free is too good in US treasuries. Yeah, that's the trouble, Matthew. Pepsi and Coke, the most defensive companies in the US, down 5% yesterday. Yeah, it's sucking all the money out. The markets, there's high bond yields and stuff. When that turns around, though, which it will do, I'm saying in 2024 it'll happen, that it'll flip. The market will start to rip, honestly. Is Metro a bad combination with Aviva? Good officially, the bottom of UK stocks. I got help to buy. I only wish I was in negative equity. In fact, the reality is the government help to buy means the government is making a huge premium off my house, going up in value. Okay. Dividend. I like Alba Mining, but they're having trouble with flooding. I think it was good prospects in the long run.
They clocked the Welsh mine.
Yeah. Do you know what? Dealing in Wales on any environmental front is very hard. Very hard. Again, I like learned pain. Yeah. Is it Ethiopia a bad jurisdiction? No, it's now part of BRICS. I also think definitely go up. They've had wars there for like the last 10 years, haven't they? Civil wars. Are they okay now? LSEG low risk. National Grid or Unilever, AI say.
National Grid. National Grid. Yeah. I mean, the problem with National Grid, I mean, I like National Grid. It's it's critical infrastructure. You've got to spend a lot of money upgrading the grid for to be able to cope with the growth of renewables and obviously the growth in electric vehicles. So there are a lot of big projects. Certainly in the east of England, but everywhere. Transmission. Yeah. And they're not easy projects, and they cost a lot of money. So I think I would say there's a little bit of political risk in National Grid. So
London Stock Exchange Group, someone says there I think
okay. So maybe I'll chuck a risk out there. I mean, it's increasingly making a lot of its money from data, and I do wonder. So for example, if you want to, use the term FTSE 100 as someone who's commenting on the FTSE 100, you essentially, to list days, for example, you've got to pay them. So I would want, the trigger happy CMA, surely it's got to have a look at, essentially the oligopoly on market data. That would be the risk for me there.
Gregory says Glaxo folk will always need drugs, but the PE could get hit.
I think if you want to go big pharma in the UK and go for the less risky one, it's got to be Astra.
Yeah, well, if winners keep on winning, and in fact, I haven't seen the chart of AstraZeneca.
That's amazing.
Look,
absolutely amazing.
Oh yeah, look at that. Yeah, now that there, look at that. That there is a phenomenal trend. Yes, this has dips up and down, obviously, but literally, look at that. From that date there, it went up, little dips, but the big stocks like that. But saying that, John, right? This here is higher. Look at all these higher highs, right? You can see here all these higher highs. Now you got a little bit of a lower high, down, lower low, or a little bit of a higher high. Maybe it's back on trend again now. So maybe that is it's one of those stocks that literally, if it's low, unless there's a structural problem with the company, just buy. GSK though, I did look at that and the chart is a bit messy. I was thinking. Look at it. It doesn't really just go up and down, up and down. So essentially, you could buy here, sell there, buy low, sell high, all the way through. And that's carried on since 2016. There's no trend there. Literally, put a price alert on right here, 13 quid, start accumulating, they pay a dividend, and then it shoots back up there. It's an awful, that's problem. They've had problems with structural changes there, haven't they? And
I would go. I would go for Diageo.
Yeah, it's a well. I say that, but they're not cheap, though, are they?
No, there's a reason for that.
Yeah, I know you've got to pay for quality. Well, in fact, now I probably looking at that. That is like it doesn't if you look at the chart on that again, it's a nice uptrend. COVID dash for cash crash, of course, it's going to hit that because people are maybe not put out so much drinking stuff. But that's a 52-week low pretty much. And you know what they say: never buy anything at a 52-week low, never sell anything at a 52-week high, because momentum is very strong. Selling by. So I would wait until that curves around.
Nice, seems great company though. I mean, and the other two I pick out, I like Compass Contract Catering, and I like Diploma, which I've been taking more of a look at since it came up the other day.
Where's Compass? Compass Group, is it? Okay, look at that. From dash to cash crash, nice. From 9.
Well, I mean, there was a very specific reason why it was hit so hard.
Yeah.
During COVID, because it provides canteens in workplaces. So unless we have another global shutdown, which seems very unlikely to ever happen again, and certainly within our lifetimes, then that will never happen again.
Yeah. Okay. So what else is there? Valirx statement. I don't know why. I don't know why it's said, but the company notes published EUDA health holders in relation to proposed merger with. I have no idea what that's about. Anything else? Oh, what about Wetherspoons? Any good from Wetherspoons?
Numbers look all right, didn't they?
They're down sort of 4%. Is he had a bit of rant here?
Oh, he's always having a rant. What's he ranting about today? He's still ranting about lockdowns, I think.
Yeah, as we said last year, perhaps the biggest threat to the hospitality industry is the possibility of further lockdown. Those interested in the government's response to the pandemic may like to read the reports by Professor. He's always on his, in the Guardian by Professor Dingwall of University. He's always pointing out to these guys who said about the lockdowns basically weren't good for the anything.
I think people would rather hear what's going on in the business these days. I mean, I really do. I mean,
Do you know what? I feel like Tim. What's his name?
Tim Martin.
Tim. Yeah. So do your own podcast. If you want to rant on about.
He's got his own newspaper.
Oh, is he?
Yeah, the Wetherspoon. Go back to that. I can't remember what it's called. The Wetherspoon Gazette or whatever it's called. The Wetherspoon Daily or what is it? Wetherspoon News. There it is. Wetherspoon News. No, I like this company and I like what it does. And I think it's.
What is that? Total number of sites. Okay, they got. Wow.
Some detailed information, but
it is, yeah.
There is stuff about the business, so I didn't get that far down. I got switched off at the rant about lockdowns.
Where's the financial? I hate that. You get total,
but yeah, I mean, it's just.
Yeah, do you know what?
It's not a sector. It's not. I like the company. So I like what they do. It's not a sector I want exposure to at the moment, especially pubs. Like
sales. Well, do you know what? I think these sectors have been hammered down. Be prepared when the central banks. Do you see that thing I tweeted out yesterday about apparently a think tank thinks that the UK Bank of England will reduce rates faster because our labour market is loosening faster than the US, and so we're poised here. It's typical when you're at an all-time low. You have a flush out like we did this week. Just everything's sold off. It forms a base there. All the sellers are out. All the people peeing their pants are out, and the people start buying in a bit now.
They've got a fair amount of debt, haven't they, old JD Wetherspoon?
Have they? Okay, let's have a look. Scroll down. Where's the financial reports there? All the way down here.
Well, I mean, at the the full year, it's about 1.4 billion.
Yeah. Oh, I can't even find the thing. I can't even find the. What's that? That's cash flows. I don't want cash flows. Where's the balance sheet? Oh, we are. Borrowings. Yeah. 4.2 billion in current. Yeah.
Yeah. So you've got. Yeah. So you've got
current assets 159. Current liabilities 387.
Basically a fair old chunk of borrowings. This company.
Yeah.
And obviously that costs that rising interest rates are not great for that. And difficult pub markets. Pubs are valued on turnover. Properties are valued on turnover. So yeah, it's been. I guess that is just and it's the same problem for all pub groups. Very, very, very debt hungry.
Yeah. So look at that, right? That's a typical example of a trend changing in a stock. All you got to do is try and avoid downtrends first and foremost, and then if you get a bit better, try and avoid ranges as well. But downtrends you want to avoid. Like I said, share price.
Double your money from the bottom.
Yeah, look at that. Share price are rolling over 50-day moving average is the red. It hasn't gone below that. In this section here, certainly didn't go below that there. All of a sudden, it crosses 50-day, then 200-day. What's happening? And a lower high there. Right, there's the last high. Lower high starts going down, then it can't get above the 50-day moving average pretty much. It tries a couple of times, but you should always put alerts on 50-day just as a warning. Is it a change of trend? When you get a V like that, it's not very good. I think it's it's a form bottom. And now we come in here, and this is the bottom forming here. 1, 2, okay? And then it rises up, breaks 50-day moving average pretty much here, previous highs, and you could say, which is crosses 200-day moving average. Nice little uptrend, but now it's broken down again. What's happening? Cost of debt that's probably going to go into range again now. So it's bounced off an oversold level, but now that's a pretty formal range here. But yeah, you can see that definitely downtrend. Anything else on the front page, John? Before we
Quartix.
Quartix, one of the biggest fallers there, aren't they?
Yeah, massive faller.
23%. What do they do? And
it's fleet telematics.
Okay, yeah. Okay.
They've got. I think the problem here is. I think it's France in particular switching off.
It's France, isn't it?
It's bloody France. Switching off its 2G network, and it seems that a lot of Quartix's kit runs off of 2G networks. So a bit of a problem there. So it's going to cost.
Here we go. Scroll to the outlook again, and you got although I never like you when you start with although. What? Hang on a second. So, although the company has made good progress in annualized recurring revenues, the board does not now believe the rate of growth has been sufficient to achieve the current market expectations for revenue in 2023 or 2024. It has now reduced its own expectations by approximately close to $1 million and 2.6 million respectively. So, even for next year as well, 2024. So, yeah, so there's a little bit of worry. They're considering a dividend payment or reduction, whatever, I don't know. But the cash business, yeah. So, Quartix, what was the ticker there? QTX.
Yeah, I mean, it's quite a good business. To be caught out by something like.
Well, that's a downtrend there, though. Look at that. Regardless if you like the business, check the chart out.
I mean, to sort of be caught unawares by the possibility that a network provider is going to switch off a 2G network that your products depend upon.
Yeah,
seems a bit schoolboy to me. And the what I think is the founder is coming back to the company as chairman. So, that is a sign that somebody is rather irritated.
Yeah.
So, it's but it has been a decent company. It has grown.
Sorry. Gregory says, Spoon's food gone downhill. Spoon's burgers always burnt. They need to sack that particular chef because they're working to a formula. They're doing burgers. Either change the formula or get rid of the chef.
The chef, is very generous.
All right, cook, whatever. The guy flipping the burgers. But are you asking for it very, very well done, Greg? Is that the problem? I asked for it very, very, very well done. It comes burnt. What's wrong with them?
Yeah. So anyway, Quartix, it's not. It's always been profitable, but it hasn't really grown. For half a decade or thereabouts. So
okay, well there we are. What's going to change that fundamental financial?
The chairman coming back, who's very very cross.
Okay, coming to the board. Right, it's been half a decade now. Anyway, for retirement, come back. You've run this thing into the bloody ground.
Yeah, not quite the ground, but
okay, yeah.
But yes.
Okay. Anything else? Any news? Anything? Fallers there. A tribal group. MTRO is up. Bouncing, trying to sell that stuff. Sell their mortgage book. They're in trouble. Vast is down. Vialis.
EQTEQ big selling by the biggest shareholder.
Oh, is it?
Yeah.
That's never reassuring, is it?
No.
But they've bought some. It was the Altair Group.
Yeah,
the director, he's purchased. Where's that then? Oh, director, but it's director dealing here. They're purchasing, aren't they? Where's the sell?
Today.
I can't see that. Holdings there.
Yeah. There you go. Reduced from
15 to 12.
16 to 13.
Yeah.
So that's the biggest shareholder.
Yeah.
That's why you're seeing the pressure on the share price today.
Okay.
But yeah, nothing else of any specific note today.
Okay, that's about it really. And one thing that just finish off just quickly, and is getting on my nerves a little bit. I just think if you go on Twitter, there are some traders who, like I said before, shout and scream when they make a bit of profit on a falling knife trade, right? I'm just saying, be a bit more humble, understand that people lost money in that stock, and don't go shouting and screaming, saying, I made some money, because there are people, it dropped 60% one day, 60%, and there are people, investors who genuinely believe in that project, and as horizontal miners. I think just jumping up and down, and people having a go at them, and then they're just throwing it back in their face, saying, yeah, I've made some money. Do you know what? Successful people, investors, traders, don't shout about it. They don't need to. The only people who shout about it are the people who have to try and prove they're making money. So, understand there are people out there who've lost money. It's never nice to lose money. And, just a bit of class, Do you know what I'm saying, John? A bit of class. In this era of like showing off on social media, on Instagram, I'm sitting next to a Ferrari, I'm in a Lamborghini, I think, let's have a bit of class here, be a bit more humble. And think about other people.
It's not the way of the world. It's not the way of the world, though, is it?
No.
Yes.
And if you are successful,
I think it's been amplified by social media.
Yeah, it has.
Post book.
Look
at my watch type stuff.
I know. I saw this guy today doing all that. Like a couple of Lambos because he said my accountant said I need to buy stuff because I'm marketing it. I've got this flash watch, this Lambo, a couple of Range Rovers. Listen, mate, you're not
cashmere jumpers.
Yeah, branded logo T-shirts. Penthouse flat in London. Yeah. What is that logo on that T-shirt, John? By the way,
it's Standard Heating Oil. It's a film. It's not a real company. It's from a film.
Just have a bit of class.
I challenge anyone to name the film.
Yeah, honestly, genuinely, very well-off, successful people don't boast. They don't need to. The only people who need to boast are the people who are losing money, and then they make the odd win now and again, and they shout about it like they're the best out there. So anyway, that's all I'm going to say. Have a nice weekend. Any plans this weekend, John?
No. Gardening, tidying.
Rock and roll, gardening and tidying, and a bit of rugby's on. You don't watch rugby, do you?
Occasionally.
Okay. Well, that's.
I forgot the Rugby World Cup was on. It seems to be played out over the course of several years. But,
they do drag it out. There's
honestly.
A couple of teams just to make up the numbers who are getting thrashed like 80-90 nil, and you think, guy, you shouldn't really be in it, should they? They don't really play rugby. There's about 20 people in that country play rugby, and they're all on the pitch. Literally the entire country who play rugby is on the pitch for them.
Yeah, it's a strange spectacle. I guess it's going to hit hot up from here, so I might watch a few matches now.
As is the weather. The climate change. That's why we need to go to renewables. Thank you very much, everyone. Don't forget it. Like, subscribe button if you could. Like it, share it with everyone you know. Anyone you know. Walk down the street, just show it to people on your phone. Do that. Have a nice weekend, and we'll speak to you next week. Bye.
See you later.